Good morning and welcome to the 80 Securities Markets Update. The first day of the week came in with low volatility and the markets traded within a slight tight range on lack of fundamentals and ahead of a busy week with a lot and many economic releases. As for today, the Asian session also showed a tight range for currencies, while commodities and Asian equities showed some notable move despite the lack of fundamentals during the session. In China, CB leading index increased by 1.3% in June, comparing to a rise of 0.7, which is the biggest monthly increase since December of 2013. In Australia, the Aussie dollar also managed to rise slightly across the board, today rising the most against the New Zealand dollar, trading around 1.0822, as the Reserve Bank of Australia governor stated that the bank is ready to act further if needed, but he also mentioned that he will still maintain the rates unchanged at this point. In Japan, all industrial activity also showed a notable increase by 0.6% in May, after it crashed by 4.6%, which is the biggest decline since mid-2011, while it had been anticipated to rise by 0.7 only, leading the Nikkei 225 to add more than 150 points with more than 1% of gains. So far, trading around 15,360, while the Hang Seng index also added more than 300 points with more than 1.5% of gains, trading around at 23,690. As for the European session today, there are also a few economic figures from Switzerland and the UK today, which may have a medium impact on the market. However, this impact is likely to be or to remain short-lived, as all eyes will be headed toward the US session, with more key figures will be released today. In Switzerland, trade balance surplus is expected to rise to 2.97 billion for the month, for the fourth month in a row, which would be the highest surplus since December of 2012, up from 2.85 billion Swiss franc. In the UK, public sector net borrowing may decline for the first time after 3 months of consecutive increases to £10.3 billion, down from £11.5 billion. And finally, the CBI industrial order expectation may decline slightly to 9 in July, down from 11 in June. Going forward to the U.S. session today, the U.S. inflation figures will be released at 12:30 GMT time. The expectation points to a lower reading in June comparing to May figures. Core CPI may rise by 0.2% in June, comparing to a rise of 0.3% in May, and during the same period, the CPI may rise by 0.3% versus 0.4%. The house price index also may rise by 0.4% in May, comparing to no change in April. And the most important is basically the existing home sales, which will be one of the important numbers following the significant decline in building permits and housing starts last week. The expectation points to an increase by 1.9% in June, comparing to an increase also by 4.9% in May. However, the number may surprise again, just like last week's building permits and housing starts, especially that the correlation between these three figures are highly positive. Finally, Richmond Manufacturing Index may rise to 4 or to 5 points in July, up from 3 in June. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.